When this Wall Street heavyweight speaks, people typically stop in their tracks and listen. Well, now Goldman Sachs is out with another prophecy saying that a hidden ticking time bomb that we saw go off on the last stock meltdown back in February is looming again as a huge threat today. And no, it's not trade war jitters or rising Treasury yields, because we hit 3% earlier on the 10-year. Goldman says it's a market liquidity crunch, and it's seeing a similar signal flashing red in the market at this hour. So we thought, wait a minute, do we just take Goldman's word for it? Let's bring in our amazing traders who apparently are noticing different types of flashing signals right now, and they're not necessarily red. Teddy, what do you see?
Well, I think, it's a mixed bag. We continue to see this sector rotation, but as you pointed out, the tariff issue clearly is trumping everything else at the moment. But you have the negative of tariffs and you have the positive of a very strong U.S. economy and very strong corporate profits. So this tug of war continues. But the de jour event at the moment clearly is tariffs, and that is weighing on the market, I think, a little bit at the moment.
Okay, so I'd say some of them are red there that you have. What about you, Phil Flynn? And let's just clarify. Goldman says it's liquidity in the equity markets, meaning a lot of cash moving in and out, and they say it's a liquidity crunch.
We're not seeing any signs of that, and if we look at the big picture, for example, it is the summer doldrums time. Volume does get lighter, and it seems a little bit. But if you look at the major indicators, just recently, for example, the Russian government, they sold like 80% of their U.S. Treasury bonds. You didn't really hear about it because it barely moved the market at all. That isn't a sign to me of low liquidity. We see the stock market. We're seeing extreme volatility back and forth. We're not really going anywhere. And I think some people will look at that as saying, hey, there's not a lot of liquidity in the market. We're just bouncing back and forth. But in reality, to me, it's showing a sign of strength in the market because it's being supported with all these strong earnings. Apple, for example, is a perfect example. So I think these, the only flashing lights I'm seeing is when I go to the train station in the morning, trying to make the train on time. So we're really not seeing that fear. And I don't think the market is, or the Fed today. Why would the Fed raise rates if they're worried about liquidity? They wouldn't do it. Or talk about raising rates.
And they held them steady at 1 3/4 to 2%.
Right.
Larry, do you see any bubbles building, any flashing red signals? What are you watching here? Because, there is the concern that risks are building in this 9th year of a bull market.
Yeah, we've been saying that for 8 of those years, and some people 9 of those years. And we're always going to be living through bubbles. We're surrounded by this notion of randomness. I don't listen to calls from Goldman Sachs or anybody else. They've laid some major eggs in the past. But with that in mind, I just look at the chorus of economic data, especially when you look at PMI, industrial production, business surveys. They're plateauing, but they're plateauing and diverging from a very high level, which points to expansion. July, we just came off the biggest global growth earnings season since January, not just the U.S., but everywhere, except for some pockets in emerging markets. And we still have to remember that central banks around the world are telegraphing very well, and we're still raising rates from a very low level. So are equities expensive? Relatively no, absolutely yes. But the fact of the matter is I don't see any bubbles right in front of me.
Yeah, and by the way, you guys saw this. The Federal Reserve must have used the word strong and strongly multiple times when they released their statement today. Strong household liquidity here, strong spending, strong jobs market, which, by the way, the AAPL number, we didn't even get to that, but we got to go. Saw a gain of 219,000 jobs. Friday is the big government jobs report. Teddy, Phil, Larry, thanks for weighing in. We've got